Welcome to Cat Eye US Stock. We watch markets with calm, focus, and sharp instincts. Thursday, February 19th, 2026. This wasn't just another dip. The market finally acted like that neat little story. Rate cut optimism plus the AI rally was just too clean for a tape that suddenly smells risk. Stocks tried to hang in early, but conviction slipped under the surface as macro pressure came back in, especially through energy and geopolitics. And with mega-cap tech not stepping up, the whole session felt cautious, even when parts of the board stayed green. Now look at the S&P 500 heat map. This wasn't a broad wipeout. You actually had a lot of muted green underneath, especially in defensive and real economy names. But the red that mattered was concentrated, Apple was a real drag, and the rest of mega-cap tech stayed soft enough to cap any clean risk on follow-through. So the board looked fine, but it didn't feel fine. And that heat map leads straight into the rotation. Money leaned into Ballast, utilities and quality healthcare, while industrial bellwethers caught a bid. Energy held up too, in the same session where oil was front and center. On the other side, tech leadership wasn't unified, and financials were soft. The message wasn't get out of stocks, it was stay invested, but pay for stability. So here's the tension that defined the day. Traders tried to stick with the clean narrative, slowing inflation, rate cut hopes, AI momentum. But once macro stress came back into the picture, the market retested the limits of that optimism. Leadership stayed mixed, and one oversized drag in mega-cap tech made everything feel heavier than the breath. This was cautious to defensive, not panic, just a tape that stopped rewarding hope. On the chatter layer, the vibe wasn't about one single headline, it was about narrative fragility. There was a lot of talk that the AI and rate cut story had gotten too tidy, so any macro jolt would expose how shallow risk appetite really was. Inside semis and AI, the conversation stayed name by name, not by the whole theme. None of that is a verified catalyst on its own. It's just the kind of unconfirmed story that can quietly steer positioning on a day like this. Today's tape only really made sense if you watched the other markets first. Equities didn't lead, oil did. Crude ripped to a multi-month high on escalating US-Iran tension, and that one move quietly rewrote the risk math for everything else: higher energy costs, stickier inflation risk, and a fatter geopolitical risk premium. You saw the equity reaction right away in the places that can't hide from fuel. Airlines got hit, and the market's soft landing optimism suddenly looked fragile. Then came the second cross-asset tell. Rates and the dollar stayed firm enough to keep pressure on duration and high multiple growth. When yields in the US dollar don't relax, rallies don't feel like new longs. They feel like short covering on borrowed time. And if you want the overnight lie detector, look at crypto. Bitcoin stayed heavy and choppy, not panic, but not risk on either, which fits a market that's de-risking at the margin instead of chasing upside. So the story of the day isn't stocks down, it's this. The macro complex grabbed the wheel. Oil said risk is back. The dollar and yields said liquidity's still tight, and equities did what they always do in that setup. They stopped rewarding hope and started pricing uncertainty. And then there was the moment that shifted the tone of the summit, not on stage but out on the expo floor. Galgodia's university came under sharp public criticism after a widely shared video showed a representative presenting a robot dog named Orion as an in-house AI innovation. Online, people quickly recognized it as a commercially available unitary go-to, not a proprietary breakthrough. The backlash was immediate. Critics accused the university of misrepresentation, and the episode turned into a public embarrassment at an event meant to showcase India's AI credibility. Organizers reportedly cut power to the booth and asked the university to clear out. The university later issued a clarification, saying the robot was meant as a learning platform, not claimed as original IP. Why does this matter? Because at a summit built around billions in AI infrastructure and national ambition, credibility is currency. When AI leadership is tied to trust, transparency, and strategic positioning, even one booth can become a reputational flashpoint.
Today's AI narrative wasn't just about partnerships and pledges. It was about the big personalities and strategic fault lines reshaping the global AI order. At the India AI Impact Summit in New Delhi, the optics said more than any press release when OpenAI's Sam Altman and Anthropic's Dario Amodei very visibly did not shake hands during a staged photo op with Prime Minister Narendra Modi. That wasn't some random awkward moment. It was a visual snapshot of the rivalry now sitting at the heart of generative AI. Altman's OpenAI has pushed these systems into billions of hands worldwide. Amodei's Anthropic has put safety and alignment right at the center of its model strategy. even publicly critiquing faster-to-market approaches. Behind the big summit headlines, from OpenAI's new Tata Group infrastructure deal to India's push for sovereign AI capability, that social moment showed an uneasy coexistence between two of the sector's most influential leaders. For investors and technologists, that snapshot matters because competitive tension shapes incentives. R&D priorities, deployment speed, pricing power, alliances, they all shift when the rivalry isn't just about models, it's about vision and control. And underneath it all, billions in infrastructure deals and partnerships are aimed at decentralizing AI development as nations and companies hedge their bets on who wins next. So the takeaway from Delhi, AI's future is as much geopolitical and corporate rivalry as it is technology, and when two CEOs won't clasp hands for a photo, that tells you the stakes, and the divisions are now front and center. Apple was the gravity well. It dropped about 1 to 2% on the day, and because it's such a big weight, it made the whole market feel heavier than the underlying participation. The backdrop here is ongoing investor sensitivity around Apple's AI and Siri timeline. And in a session already leaning defensive, that kind of leadership wobble matters more than 100 small green boxes on the heat map. Nvidia was basically flat, and today that was the point. Nvidia didn't show up as the hero bid that drags the whole growth complex higher. With semis mixed and the tape already defensive, a pinned Nvidia looked like consolidation, not a fresh wave of AI-led risk on. AMD was a bright spot up on the day, but the read wasn't semis are back. It looked more like relative strength dip buying inside a choppy group. In other words, selective appetite for certain AI and compute exposure, not a clean broad-based bid for duration. Supermicro SMCI ripped higher in a big way. This is one of those high-beta AI infrastructure names that often trades like a risk proxy for the whole theme. In this sweep, there wasn't a single confirmed headline tied to the move, so treat it as momentum and positioning until proven otherwise, but it mattered because it showed that even on a defensive day, traders will still chase selective AI beta. Goldman Sachs GS finished notably lower. Financials were generally soft, and that matters because banks and brokers are classic risk barometers. When the tape is truly risk-on, you usually see better sponsorship there. Today's GS weakness fit the broader message: cautious positioning, rotation, and not much appetite to relever into fragile trades. Lockheed Martin LMT had a strong up day. That lined up with the defensive, hedge-like posture that showed up across the map. And given the day's focus on geopolitical pressure in the broader narrative, defense strength looked like investors paying for protection while the rest of the market wrestled with risk premium. Looking to the next session, the calendar doesn't flag any major high-impact U.S. data for Friday. So near-term focus stays on two things. First, macro pressure, especially the cross-asset signals that drove today's tone. Second, leadership. If Apple can't stabilize, index rallies can keep feeling heavy, and in AI, watch whether Nvidia breaks out of neutral, whether AMD's relative strength holds, and whether SMCI follows through or snaps back after that outsized move. Next week, attention shifts to Fed speak. Governor Waller on Monday and Tuesday, and consumer confidence on Tuesday, plus claims and PPI later in the week. Bottom line, this was a market pricing uncertainty. Breadth didn't collapse, but conviction did, especially in the leadership that usually carries risk. On rotation favored stability, and the macro complex, oil, rates, the dollar did most of the talking. Into the next session, the question is simple: do we get follow-through in defense, or does leadership finally reclaim the wheel? Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.